everyone, it's Coram and Harold Morris here with your option of the day. We're going to be talking about a bull put spread in United Airlines. A lot of airline stocks have been looking hot lately after kicking off the year with some really strong runs. This one is moving sideways in a nice tight formation, Harold. So before we get over to Thinkorswim, let's analyze the chart on MarketSmith to talk about our thesis with this trade.
Okay. Well, what I was looking at, you see the actual breakout, it did fail. So the stock broke out, it immediately failed, but then you look at those blue bars after it got down. So you had, I counted, I think it was 8 days in a row on above average volume. So that's a lot of strength into the stock. Now it's trading sideways, and as it's trading sideways, the volume has also dropped. So that's a good sign when you see a really strong move like that, and then support at the 21-day exponential. So that's what attracted me about the stock here. So I've been looking for stocks that are pulling back to major moving averages, and I say, okay, as you mentioned a moment ago, the travel industry is doing very well in the market. So let's take a look at Thinkorswim and take a look at this trade here.
Yeah, sounds like a plan. And with the bull put spread, we have the expectation of a moderate rise. This is a bullish setup here. The stock is trading just under $50 a share. So you're right. Let's walk on over or head on over to our trading platform to talk about the expiration dates that we're looking at, as well as the strikes. So we'll go there.
Okay, so got UAL, which is a ticker symbol for United. And I'm going to give you using the weeklies. Normally, I like the monthlies, but just not enough time. And I don't want to go out 121 days. So I'm going to go out to the 43 days out on this trade here. So I'm just going to click on that. And then we're going to go to the put side. So again, we have puts on this side, calls on this side. So I'm going to sell the 47 strike here. So I left click there. And I'm going to buy the 42. Hold my control key down, and there's your trade. Now, when I was doing this, maybe about 10 minutes ago, the credit was a lot larger. So I'm going to actually increase the credit amount here, which occasionally I will do. I was looking at it was $1.21 earlier, and I want to do this because it's going to match the numbers. I'll show you the numbers here in a moment here. So $1.21 credit on this trade. So now what I want to do, something a little bit different. We've been going to the risk graph in the previous videos, but we're going to do a couple things a little bit different. We're going to look at the probability of success and then capital allocation. So how do you calculate the probability of success for this trade? So I'm going to go over here and I'm going to click on this tab here, and I've got some notes here. So the way you probably calculate the probability of success is you take the width of the spread, which is $5, all right, minus the credit received. So we have a credit received of $1.21. That gives us $3.79. So this $3.79, that is your actual risk.
Right.
Okay. Now to actually calculate the probability of success, we take the actual risk divided by the width of the spread, which is $5, multiplied by 100, and that gives us at 75.8%. So probability of success is defined as this trade making 1 penny or more. Okay, so it could make more than that, or it could be right at 1 penny, but that's how you define probability of success. So let's say, hey, I like these numbers here. I like this probability here, and I want to put up $2,500 for this trade. Okay, I'm new to options, or I have a small account, or whatever the situation. Which I just chose a number of $2,500. So you take the amount of capital you want to risk divided by your actual risk, and that gives you the number of contracts. So when you do the math, 6.59, well, you can't do 5.9, so you can just do 6 contracts. So I'm going to go over here and I'm going to change the number of contracts right over here. Change that to 6. I go over here to confirm and send, and you see right there, it's not quite 2,500, but it's close. And if you want to do a little bit more, a little bit less, you can always adjust the contract size. So that's the amount of capital I've got risk. You can see the break even. I like when the break even is below where the stock is trading. And that's my max profit per contract. And if I'm satisfied with these numbers, I just go down here, I click on send, and hopefully I get filled. Now, As we saw earlier, let me just release that. I had $1.21 and now it's at 98 cents. I raised the number of the credit because it matched the notes I was taking prior to recording of this video. But I can leave it at 121 because my attitude is I want to be filled, but I don't have to be filled. So if my
Great point.
price, $1.21, I'll take that. So I can just raise it and send it off, or I could just send it off and with this current credit, I just adjust the numbers. That's all.
Awesome. Well, thank you so much, Harold, for walking through this trade and giving us some more meat there in terms of how we can look at this in terms of our overall portfolio management and the amount of money that we're willing to risk, and converting that into the number of contracts that we should be looking at for this trade. Also, check out the new Options Trader app from IBD for more trade ideas, options education, and more. You can download it from the Apple App Store today. Thanks, Harold, and thanks everyone for watching. We'll see you next week.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.